Well, Asian markets, they trade higher after US President Donald Trump. He announced last week that tariffs would not be slapped on Mexican goods. On the back of that, you have the Nikkei that's moved to the high point of the day, sitting with a gain of close to around 1%. The Kospi was high with a gain of around 0.5%. Now, that's come off a tad bit from the high point of the day. So that's sitting with a gain of around 0.2%. So that's come off actually considerably from today's peak. While pull up the other couple of markets, both the Straits and the Taiwanese index, the first tick is in the green. The Taiwanese index doing quite well, actually, a relative outperformer today, up close to around 0.8%. All this would mean that after Friday's trading session, where we saw a 100-point pullback from the low point of the day, maybe we're bracing ourselves for another 50-point bump up just to kickstart trade.
Okay, so Asia is in the green, and that is because the Wall Street also ended in the green. The Dow Jones posted its best week since November 2018 as poor jobs data spurred hopes of a rate cut from the Federal Reserve. Remember, US market sentiments were also supported as President Donald Trump announced last week that tariffs would not be slapped on Mexican goods. CNBC's Josh Lipton gets us a wrap of all that action on Wall Street.
U.S. stocks finishing the week with a bang. The Dow up 263 points, the S&P climbing 29, the Nasdaq adding on 126. Those gains coming despite some disappointing economic data out today, with the U.S. adding just 75,000 jobs in May, and that was well below the 180,000 that economists had expected. Worse still, March and April's reports saw substantial downward revisions. Investors seeing the silver lining, though, betting that weak job numbers could mean a rate cut from the Federal Reserve is now more likely. Meanwhile, the FDA and the FTC issued warning letters to 4 e-cigarette companies for violating tobacco advertising rules. Companies are required to include a statement in social media posts warning consumers that e-cigarettes contain nicotine. The letter is part of a larger regulatory attempt at battling a teen vaping epidemic. And Walmart announcing a new in-home grocery delivery program. Beginning this fall in select markets, Walmart employees will deliver groceries ordered online right to consumers' refrigerators. Walmart says it isn't detailing the price of the in-home delivery service to shoppers until it launches.
Well, U.S. jobs data for the month of May disappointed, with the economy adding just 75,000 workers in May versus consensus expectation of over 175,000. Here is some opinion from market experts on the economic slowdown and prospects of a Fed rate cut in the upcoming policy.
This is about a slowdown in the economy that really started in the first quarter. The first quarter numbers were elevated because of inventory growth, but that doesn't really affect jobs that much. So we think this is a natural slowdown in the economy, but I am worried that the tariff talk is making this worse on a global basis. It is adding some drag to the US economy here. So I think the economy is growing more slowly, and at this stage, I think it is quite possible the Fed does cut rates in July.
We have seen a slowdown in monthly job gains since the start of the year relative to last year. That slowdown is in the context of trade wars, and I think that's something that we're really sort of facing a headwind on now. The context is also really important for the Federal Reserve because they are more than willing to do a preemptive cut to deal with the sentiment effects out there. They really saw what happened in December where we had really good data and then had a sentiment collapse and had almost a self-fulfilling prophecy of that pullback in retail and orders and investment. And I think that's something they're very concerned about and cognizant now. And so in the context of the fears we have out there and the skittishness, that's why the Fed is going to take this number and use it as one more reason to do a preemptive cut in rates.
I think it raises the question about whether the trade uncertainty was already having some impact on the economy, prior to the latest escalation as far as Mexico is concerned. This, came after the original tweets about China. And I do think it raises that question. Now, I don't think it answers the question, because while both the BLS and the ADP report were both very weak, some of the surveys, including non-manufacturing ISM employment, which is a pretty good survey, were actually very strong. So I don't think it's something that would lead you to, judge conclusively that things are weakening, but it definitely raises the question, raises the downside risks, I think.
Well, on the European markets as well, they ended higher on Friday. This has the weak US jobs data that raised hopes of Fed rate cuts going ahead. So that's something that's, that's helping those markets move higher. And on the political front, British Prime Minister Theresa May officially resigned as the leader of the Conservative Party on Friday, though she will maintain her position as the Prime Minister until her successor is appointed. Well, in terms of the frontliners, all of them ended in the green, but it was not just the frontliners. The Spanish index as well ended with gains in Friday's trading session of around 0.7%. And even the Brazilian index, remember, post the favorable election verdict, you saw that index hit the 100,000 mark. Then it corrected to around 91,000, 92,000 odd. And from there, it's seen yet another rally all the way closer towards that 98,000 odd mark.
Okay, moving on and talking about the currency space then, the dollar index weakens after weaker than expected US jobs data increases odds that the US Fed would go on an easier monetary policy, while safe haven Japanese yen strengthens versus the US currency.
Okay, then turning our attention to the all-important world of commodities, then crude oil prices hold steady, coming off the 5-month lows hit during the last week. This after Saudi Arabia signaled that OPEC and its allies will continue to extend production cuts.
Okay, it's time. Well, back home on the Lal Street, Nifty and Sensex closed with minor gains on Friday. The Bank Nifty outperformed while the mid-caps came under pressure. The global screen is looking positive with the Dow, etc. gaining over 1% in trade, and the US actually posted the best weekly gain in the last week, while the Indian markets were a tad bit in the red for the entire week. But what about today and this week? Nigel will tell us all those important cues lined up for the day. Nigel, tell us.
Well, I'm looking at some positive global cues first, Anisha. Great news coming in terms of the United States and Mexico. They're not going to go ahead and, levy those tariffs that we've been talking about. The second factor is that there's disappointing economic data, both labor as well as non-labor data coming out of the United States. So that's what will help, in terms of the Fed going ahead and additional reasons coming in for them to go ahead and cut interest rates. And the third factor is, yes, Brent crude prices have moved up, but comfortably below that $65 per barrel. From an India point of view, we are very, very pleased. Let's address the first point first. President Trump went ahead, put on a tweet. He said that they've reached an agreement with Mexico, and the tariffs that were scheduled to be implemented from today, that's not going to be implemented. So tequila time out there. Great news coming in there for the Mexicans as well as for the global equity markets as well. Then in terms of the US economic data, the number of jobs that were added were only 75,000. The consensus was forecasting a number of around 175,000. So that's clearly a big miss. Now we'll focus on our domestic cues. One is the onset of the monsoons. We'll have to keep an eye on that very, very closely. Yes, they've hit various parts of India, but still in the north, there is a heat wave actually with temperatures in excess of around 42, 43 degrees odd. So that's one factor. And second factor is, what do we expect from budget 2019? So that's going to be fairly important. Now in Friday's trading session, we saw a big recovery from the low points of the day. Both on the Nifty as well as the Nifty Bank, 100 to around 450 points is what we saw. The problem is the mid-cap as well as the small cap index continues to underperform. When you have the frontliners ending in the green, and both those two indices were down a tenth to around 0.2%, you like to see that play a bit of a catch up, then that'll be rather good news. At the end of the day, we came to know, yes, the FIs were the culprits yet again. Net institutional sell numbers nearly around 300 crores, because the FIs for the third straight day, they sold more than 450 crores odd in a single trading session, clearly putting pressure on the markets. If we're looking at the FNO space, well, in the live market, you're tracking the open interest. There was unwinding in terms of the Nifty. There was unwinding in terms of the Nifty Bank as well in Friday's trading session. And at the end of the day, the FI numbers as well told us that, because they unwound some long positions on the index. And in fact, they bought 3 calls for every 1 put, while they wrote some puts as well. So a mixed picture coming in there from the FIs. But in the past week, actually, they added more short positions than in fact the long position. Because just take a look at that. From 41% short positions, it's gone to around 44%. If things go really right, that'll be a boon actually for the bulls, because they'll have to cover out some of the short positions, and that's how we'll move higher. In terms of the index options, last week, they clearly bought more calls than puts. Short point, today the index, the SGX Nifty is indicating a 50-point bump up. You add Friday's recovery, so it will be nearly around 150 points from the low that we saw on Friday. And there's a broad range we're working with of around 350 points. 11,750 to around 12,100. The technical levels are looking at the 20 and the 50 DMA. Well, they are a little deeper, closer towards the 11,650 mark. So that's a fair distance from here. In the short term, Friday's low is a near-term support for the Nifty of around 11,770, while on the upside, last week's high or the fresh high that the Nifty had of around 12,100, that becomes a crucial resistance.
Okay, Nigel, thank you so much for that. So that was about the market cues, but then there were a lot of stocks that we were also discussing over the weekend in terms of DHFL, ADG Group, new banking norms coming in. All of that will impact the stock list in focus today.
Well, that's right. We had that RBI circular as well that did come in post-market hours. And the Nifty Bank, if you pull up the intraday chart, there was a big recovery in Friday's trading session of around 400 points odd. Now, this should be good news actually, because the RBI, they have eased the one-day default rule and they replaced it with a 30-day grace period. Maybe some part of that did play out in Friday's trading session. We'll keep an eye out on banks as well as NBFCs and the financial institutions on the whole. Mindtree, well, in terms of that, L&T has gone ahead. Now they're giving the dates, June 17 to June 20th. That's when they'll be launching that open offer. Very little to play out there because Mindtree's price is already around 970 rupees, also just a 1% premium. Mahindra & Mahindra, they have announced no production days. That's to bridge the gap between the production and the sales. There was inventory that was piling up as well. The management believes that there's no adverse impact on the back of this, but clearly not great news when your plant is shut down for around 5 to around 13 days odd. Reliance Power, Anisha has been tweeting about it as well, and she's been telling us the kind of losses that were posted out there, more than 3,000 crores odd. Yes, there are a couple of one-offs out there, but keep in mind, finance costs for a single quarter more than 1,000 crores, clearly not great news at all. Z Media, the promoter group, has gone ahead and sold close to around 2.5% stake odd, so we'll keep an eye out on that stock. And Bharat Forge, a joint venture with Germany's Refu Electronic. Out there, Bharat Forge will hold close to around 50% stake in that. So, that's just some incremental news that's coming in there. And KPR Mills, yes, we knew that there was a buyback, but now they've given that the record date is on June 19th. So keep an eye out on that stock. But more than all these stocks, Anisha, you'll have to keep an eye out on a few of these corporate groups. Z Entertainment, can they come up with the money to go ahead and repay their debt? That's going to be very, very important. In all possibility, that looks like the one that will come up with the money. DHFL has been reassuring their investors as well. Can there be a resolution out there? Will there be a funding gap out there? So we'll keep an eye out on that. And Anil Ambani Group stocks got smashed in Friday's trading session. Some of those results as well, didn't look great at all. So can there be a resolution coming in for this group as well? We'll keep an eye out on all these stress groups.
Oh, well, yes, corporate debt has been the key talking point in the market. In fact, RBI did unveil new NPA norms over the weekend. We'll get you more details
here on CNBC-TV18. Now, 2 months after the Supreme Court quashed RBI's framework to resolve stress assets issued on the 12th of February last year, the central bank has come out with a new set of rules. The one-day default rule, one of the key cornerstones of the RBI's February 12th circular, has been eased. The RBI has put in place a 30-day grace period. So what else has changed? Ritu Singh joins us with all those details. Ritu, over to you.
The new set of rules governing the resolution of bad loans are finally here, and several changes have been made compared to the Feb 12 circular. The biggest one is doing away with the one-day default rule and instead allowing 30 days before that 180-day timeline for resolution plans kicks in for the bankers. The second big change is that IBC, which was at the heart of the Feb 12 circular, is not going to be mandatory anymore, and this is in line with the Supreme Court's orders. The third big change is that NBFCs were not part of the Feb 12 circular, but now this will be applicable to NBFCs and even small finance banks. The fourth biggest change is that all resolution plans will have to be implemented under the inter-creditor agreement, and this was not part of the Feb 12 circular. It also makes way for dissenting creditors to be provided at least the liquidation value under the resolution plan. The voting threshold has also been brought down, which was unanimous earlier. Now 75% by value and 60% by numbers will be sufficient voting to pass any resolution plan. The other big change really to incentivize banks to speed up resolution is that additional provisioning will be imposed if they delay resolution beyond 180 days. The last big change that has come in is the condition for upgrading the account back to standard. Earlier, the Feb 12 circular said that only if the account remains standard from the time of implementation of the plan until such time that 20% of the principal debt is repaid, it cannot be upgraded back, and that has now been diluted to 10%. Now, who are these guidelines applicable to? all large borrowers with exposures of over 2,000 crore rupees. The circular comes into effect immediately. Between 1,500 and 2,000 crore rupees, it comes into effect from January 2020. But for all accounts with under 1,500 crores of exposure, the guidelines have not been specified but are expected from RBI soon. The other big change, of course, is a punitive measure introduced, as I was saying. If there is delay in resolution plans beyond 180 days, there will be 20% additional provisioning that banks will have to hold, and after 365 days, that will go up to 35%. Now, even though RBI cannot make IBC mandatory, it is still trying to nudge banks to use that route by giving them the incentive of withdrawing the additional provisioning if they choose to go with the NCLT route. What they have said is that half the provisioning can be reversed at the time of filing of the case with the NCLT, and if the case is admitted, then the full additional provisioning can be reversed. Now, these are the new norms. They are diluted, but at the heart of it, the essence of the Feb 12 circular has been maintained, in that RBI wants to ensure that there is time-bound resolution.
Thank you, Ritu, for putting neatly and summarizing all those important changes as part of the RBI circular. But to understand the implications, we did talk to a whole host of experts. Let's listen in what they had to say.
I think the RBI clarification and the new circular is a very welcome step. It has created a lot of clarity on the aspect of various stakeholders. It has given a more freedom to the bankers to bring their own resolve, and instead of directions, it has been propelled by the provisioning requirements which will propel the lenders to take timely decisions. The regulatory framework has really clearly spelled out that if 365 days the resolution do not take place, the incremental provisioning requirements are there. Right. So that incremental provisioning requirement will make a balance sheet compulsion for most of the tax to quicker decision. So that's a regulatory framework is already prescribed for it.
In terms of the spirit and the rigor, it is identical to the February 12 circular. Only thing is that now the banks have more delegation. There will be a board level, resolution policy, and the discretion whether you would like to take it to the insolvency bankruptcy proceedings or would you like to settle it outside that. So that decision is with the banks. IBC always, has been the last resort. It's not supposed to be the first resort. So this is in line with that.
More coming in from the RBI. The central bank has imposed a 2 crore rupee penalty on Kotak Mahindra Bank. The RBI has exercised its powers under Section 27 and 35A of the Banking Regulation Act for lack of disclosures on promoter holding and ways to dilute it under 20%, which is the RBI norm. Now remember, Kotak and RBI are locked in a legal battle at the Bombay High Court over promoter stake issue. In its response, Kotak Mahindra Bank has said that it is examining the issue. Former Executive Director at SEBI, Jayant Gupta, has called RBI's move irrational.
There are 2 points that Reserve Bank is making. One, non-disclosure of shareholding of promoters to the bank, which is at the best laughable, because the Reserve Bank is every year submitted the annual report of the bank, and annual report contains who are the promoters and who are the something. The second part is very practical issue, that how does the bank reduce promoter shareholding? I am a shareholder of a company. How do you reduce my shareholding? A company cannot reduce my shareholding unless until you usurp the right of shareholders. In the sense, tomorrow if there is an issue of further equity, unless until Mr. Kotak or his family votes in favor of the dilution, there is no way the bank can dilute the equity. So to me, it looks something, I would like to say it is irrational, and it cannot be explained.
Okay, let's see how Kotak Mahindra Bank stock reacts in trade today. But on that big story from the M&A space then, infrastructure major Larsen & Toubro has announced an open offer for over 5 crore shares of IT company Mindtree. L&T plans to spend over 5,000 crore rupees for this stake acquisition, which will make it the majority shareholder in Mindtree. Mugdha Warrior joins us with more. Mugdha, over to you.
L&T has brought out a letter for an open offer to acquire up to 31% stake in Mindtree, and the company looks to acquire 5.13 crore shares in the company for rupees 980 per share, and it has plans to launch the open offer on June 17th and close it by June 28th. Remember, L&T's earlier plans to launch an open offer for Mindtree on May 14th were derailed after the SEBI approval came in much later than anticipated, but CNBC-TV18 had reported last week that L&T has finally received the SEBI approval and is on track to, go ahead on its target to acquire up to 66% in Mindtree. Remember, it has already acquired 19.96% from VG Siddhartha and Coffee Day in Mindtree on April 30th and has been consistently picking up shares via the open market. And currently, L&T's stake in Mindtree stands at 28.9%. So all eyes now on the Mindtree Independent Directors Committee and the recommendations that will bring out on the value, 980 per share value. The recommendations are supposed to come in by June 13th. We understand that the Mindtree IDC has not met so far and are expected to meet only early next week. We have reached out to Mindtree IDC head Apurva Purohit and are still to hear back.
Well, after default followed by downgrades, DHFL was down another 11% in trade on Friday. But the company's chairman, Kapil Wadhawan, says it remains solvent and generating cash flows. They are about to make all the repayments within the 7-day grace period and remains also confident of finding a buyer in a couple of weeks.
Come September last year, 2018, yes, we abruptly got caught into a liquidity jam. And I'm not talking about just DHFL, it was the sector as a whole, both the NBFCs and HFCs. Post that, right till today, all the market participants have found it extremely difficult to go out and raise fresh resources from the marketplace. DHFL has had a strong history and standing with, more than 30 banks in the country, whether it's in terms of term loan borrowings or going out and selling down loans to them, which has been much appreciated by the industry, by the participants, that the quality of assets has been of absolutely pristine value. It's not a solvency issue at all. I think this misnomer and I've heard some of the market experts talk about solvency issues, about DHFL being tagged with some of the other companies which have had similar problems from different sectors. We are a financial institution. We have underlying assets which keep on giving us cash flows even till today, and will continue to do so. Now, if you abruptly stop the lending activity for a large institution like us having more than 1.25 lakh crore AUM, and expect me to start paying down the liabilities of all my creditors, even a bank today, in that situation would not survive. The company is firstly not insolvent, it's a solvent company. We continue to get cash flows. The actions taken by the rating agencies post January, and starting from the first week of Feb, from where we were rated as a AAA marquee, housing finance company, and within 3.5 months downgrading it to bring it down to a D. I think there are big questions here to be asked even to the rating agencies.
Well, staying with the stressed assets issue, confidence has been badly shaken in the NBFC space over the past 1 year. But how bad is the situation? Sonal Sachdev joins in with the highlights of the reports released by Risk Event Driven and Distress Intelligence. Sonal, very good morning. Tell us, what does this report entail and which are the companies that it's talking about?
Morning, Anisha. First to caveat, this is a report from RED, an agency that sort of tracks, research house that tracks Asian and emerging sort of markets, and we can't vouch for the contents. But what they allude to is the existence of box or dabba companies, if you would like to call them that, in the NBFC sector in India. And basically, what is a dabba company? So they say promoters promote companies which use the capital they have received to buy stakes in each of them, and therefore distance themselves from the promoters. So the promoter no longer has a link with the dabba company, so they become independent entities, and they are not required to be, so they don't come up in related party transactions. Now they've taken instances of two groups, DHFL and RCAP. I'll come to DHFL first. So in the case of DHFL, they claim that funds from DHFL, about 2,000 crore, were used to buy shares of a promoter company worth about 1,700 crore. In case of RCAP, they claim that the actual, funds offered to these companies via loans, etc., by various RCAP group entities amounts to as much as 13,700 crore. Whereas what's reported in related party transactions in the annual report for FY18 is only about 1,100 crore. So, I mean, again, we haven't verified this. We reached out to DHFL and RCAP. No significant comments from there. In fact, one of them says that, this report is not even worthy of a comment. So, I mean, the jury is out on the veracity of this report, but definitely raises questions.
Okay, all right. Sonal, thanks so much for joining in and filling us in with all those details. We'll keep an eye out on both those two stocks and both those two, groups on the whole, all through the trading session. But for the time being, let's shift focus to the auto space. India's top priority and everything else comes next. That's the word that's coming in from Royal Enfield's Siddharth Lal. Speaking to Shireen Ban, Siddharth Lal, who is representing India at the EY World Entrepreneur of the Year Awards in Monaco, shared the details of his expansion plan for the domestic market. Let's listen in.
Well, the aspiration is that in every country that we enter, we want to become a big player. We want to be 5% of the market, 10% of the market. We want to be the biggest player in the mid-sized market, which is where we feel that, especially in developing markets, there's a huge base of commuters in Brazil, China, in Brazil, Thailand, Indonesia. There's a lot of commuters, and they need something special to rise up to, and that's what Royal Enfield is all about. So much bigger numbers, obviously. I mean, from 2,000 a month, it should be 10x or 20x that. But that's, and we're going to get there. It's a matter of 10 years or so, and but we're on the right path.
One concern that investors may have is that as you try and expand your global presence and this aspiration of creating a global brand, are you perhaps going to ignore the domestic market? And I'll ask you that in the context of the fact that you're still about 6% of market share here as far as the domestic market is concerned. So where does India fit into this aspiration and the strategy in the next decade?
I mean, I should have said that before, because there's absolutely no question about it. India for us is market number 1, 2, 3, 4, 5, and then after that comes everything else. So there's no question at all that India is going to be the top priority for decades to come. It's also the base and the foundation on which we have the strength to go anywhere else. So we have to, India is our strength. India is where our home market is, and it's a huge home market. So any motorcycle, just as an example, any new motorcycle that we develop, even our 650 twins, the reason they're 650 and not 800 or 1000 cc, for example, is that we wanted it to be relevant to India. And you can see that already, that our existing 4 million customers of Royal Enfield, they're really warming up to our 650 twins. But honestly, if it was much bigger than that, if it was much more expensive than that, we wouldn't have been able to make it. So the India strategy is absolutely critical core to Royal Enfield and its global ambitions.
Okay, let me try and get more color on the India strategy, because as you pointed out, that's the number 1, 2, 3, 5, 10 market, at least as of now, as far as Royal Enfield is concerned. What is it going to be driven by? Is it going to be driven by better distribution? Is it going to be driven by trying to sort of go in there and plug whatever the geographical gaps that you see in the market? How much of it is going to be driven by product, Siddharth, is the question that I have for you.
Well, it's got to be both. There's no question about it. But and even Vinod Dasari, who's joined us recently as CEO, has taken firstly the India side, and we've been spending a lot of time on that as the core area. And there we break it up into two. We have the highest potential, maybe the northern belt, which is undersaturated, relatively poorer part of the country, where it is much more about distribution. So we're getting deeper and deeper into markets like UP and Madhya Pradesh and Bihar and Rajasthan and even Orissa, Andhra, West Bengal. We're going to have many hundreds of those stores coming up in this year itself, which are smaller format stores, which can help us getting deeper into the heartland markets in India. Whereas in the more mature markets, like let's say Kerala or Punjab or Karnataka and Maharashtra, there we have already very good distribution, so there's going to be more product-led.
Okay. Well, the committee reviewing the Reserve Bank of India reserves will submit its report by the end of the month, says the head of the panel, Bimal Jalan, as well as member Rakesh Mohan. Both are confident that June 12th will be the final meeting of the 6-member group. Lata joins us early this morning to fill us in with all those details. Hi Lata, good morning.
Well, first, why this committee is very important, because Reserve Bank has 10 lakh crore of reserves, and governments have long been wanting a small part of it so that the fiscal deficit is bridged. So it is very important whatever little bit we have got. First thing they said is that they had been asked to submit on March 31st. They had asked for a 90-day extension, 3-month extension. They will not ask for further extensions. The last meeting is on June 12th, and Rakesh Mohan indicated that mostly on 12th itself the recommendations will be submitted to the government. We are not very sure whether it will be released to the press. It's possible that it will be given to the government, and the government will decide when to make it public. The important point is whether they will give money and how much they will give. Now, what we could get from Dr. Rakesh Mohan, by implication, he refused to say anything like Bimal Jalan himself on the contents of the recommendation. But when I asked him that if you take away the capital, will you hurt the autonomy of RBI? He said we should not confuse the two. That money is available for nation building, and so we must not confuse it with autonomy, which gives me the impression that some money is definitely coming. Just listen to the two governors and then we have a little more. The ECF report, when can we expect it?
No, we are, our last meeting is on 12th of June, as it has been even discussed by your channel and all that. So we will see after that. We hope that we will be able to submit the report in June itself. Yeah. You
had asked for extension till June 30.
Yeah,
it should be, the report
something
should
like
be
that.
ready by before,
whatever.
Or would you need more extension?
No, I hope not.
Okay, can you give us any indication whether you will be able to recommend some money being transferred from Reserve
No, I can't give you any indication even after the report is submitted.
Okay, it is for the government to indicate. Will the report also recommend how the money will be transferred, in one shot, in tranches?
Look,
will you also recommend?
No, I can't speak on it. We just wait and see.
Considering there are two central bankers, I would assume the autonomy and credibility of the central bank is something that you bring to the table.
Yeah, no, I think that it's a mistake to think of it as an autonomous central bank issue. I think it's much more important to think of the general issue for the economic and financial stability of the country, and of course the central bank, the Reserve Bank, is a crucial part of maintaining economic and financial stability of the country. So I do want to emphasize that actually, that in looking at any of these issues to do with the central bank, there has been a tendency in the past few years to look at the central bank in some sense independent or in contrast to the government. And I do think it's a mistake, because the central bank is very much part of the overall macroeconomic management of the country. And to look at all these issues, you really have to take the interest of the country is the basic objective.
Okay. Well, that's very useful to change our perspective itself and not start wondering whether the central bank is denuded of its autonomy. I look forward to the report with interest. There is the evaluation reserve and the contingency reserve. The evaluation reserve is not yet realized. Any comments on that?
No, as I said, we'll be addressing all of these issues in detail.
On June the 13th.
June 12th is the meeting.
And then after that, let's hope that it'll all be done and we can talk about it.
Okay, so we heard the two former RBI governor, but Lata, tell us what did the former RBI governor, YB Reddy, had to say on this matter?
Okay, well, from both Jalan and Rakesh Mohan, I tried to ask if they will give one-shot money to the government or whether it will be given over time, even if they were not willing to tell me the amount. Obviously, they wouldn't. Both of them were kind of tight-lipped on that. I posed the same question to Dr. Reddy, who was also in that seminar, NCAR seminar, and he said that for two reasons he would like, now he is not a member, he would like the money to be given over time. One, because it will be macroeconomically disruptive. If you put too much money, it would be monetization of the deficit as well. RBI may be forced to sell bonds to realize the money. So there is macroeconomic disruption if you gave 2 lakh crore dividend or something like that. And the other thing is intergenerational equity. After all, this money has been collected by the Reserve Bank over maybe 15-20 years. 1 year cannot be the beneficiary. The benefit also has to go over a few years, and so chances are whatever bonds of the Government of India RBI holds, when they get redeemed, government will not pay the money. They will just allow it to run off. That could be one way. Now, let me re-emphasize, he is not a member of the committee, but they are all three very close friends. So I would give a lot of weight to what Dr. Reddy is saying.
Okay, all right.
I think we can get economic implications is to set off if there is any quote-unquote excess reserves, to set off against the liabilities the government paper held by the RBI. That will be neutral in terms of monetary implications.
So assuming Dr. Jalan's committee finds, say, 2 lakh crore excess, you wouldn't advise that it be given as a dividend to the government. You would want it to be in the form of bond redemptions not paid for, cancelling bonds.
I would say that is most appropriate from the point of intergenerational equity.
Okay.
These are the accumulated insurance that has been built in the RBI, the future obligations of the loans. So in a way, I think it's a fair solution, and it is minimum disturbance to the macroeconomic balances.
Well, the very important news over the weekend was the fact that India beat Australia by 36 runs at the Oval to win their second match of the ICC Cricket World Cup 2019. India had won the toss and opted to bat first. The openers Shikhar Dhawan and Rohit Sharma justified their decision with a solid stand worth 127 runs. While Rohit got out for 57 runs off 70 balls, Dhawan hung around and was eventually dismissed for 117. Thanks to some superb hitting from Kohli and Pandya, India ended up scoring a mammoth 352 runs on the board. In reply, Australia never looked in control. Steve Smith top scored with 69 runs, and he was ably supported by David Warner, who scored around 56 runs, but it proved insufficient in the end, and India winning that all-important match against Australia.
That should be gone. Well, Chak De India, that was good news. But sticking with sports news then, the king of clay, Rafael Nadal, beat Dominic Thiem to lift his record 12th French Open title. Nadal beat the wary Dominic 6-3, 5-7, 6-1, 6-1 in the French Open final to become the first player ever to win the same Grand Slam 12 times. Nadal also took out Roger Federer in straight sets to advance to the finals, while Thiem beat Novak Djokovic in the semi-final stage. Looking at the bigger picture then, Nadal is now up to 18 Grand Slam trophies, moving within touching distance of Federer's men's record of 20.
Okay, that was from the world of sports, but we have a lot of cues to track from the world of commodities as well. And Manisha Gupta, as always, joins us with those details. Manisha, good morning.
Morning, and thank you. Well, yes, we have started a new week on a positive note for the commodity market, especially the crude oil prices, which have rebounded. This is after comforting statements from Saudi Arabia, most of the OPEC members, and Russia talking about withholding production for 2019, and that's given some support to prices. Also, the U.S. rig count in the previous week has shown a decline of 11 rigs, and that is the lowest in many months, and that has been supportive. Add to that the weakness in US dollar, which fell 1.3% in the previous week, is trading at around 2-month lows, and that has been supportive. You have seen the high-yielding commodities, asset classes, Asian equities are on a rise, and that seems to be supporting the industrial commodities. So not just the crude oil prices, but we also are looking at the industrial base metal prices trading in the positive as well. So while crude, of course, has regained ground above $63 per barrel for Brent, remember, we did see 59 kind of levels as well in the previous week. It is a similar scenario for the base metal prices, where 0.5 to 1.5% of gains is what we've opened markets with in sense of Shanghai.
Okay, all right. Thanks so much, Manisha, for joining in and filling us in with all those details. Let's shift focus then to the derivatives market. In Friday's trading session, you saw a sharp recovery on the Nifty, 100 points from the lows. On the Nifty Bank, it was nearly around 450 points from the low point of the day. Before we get to what the FIs did in the F&O market, well, in terms of the cash market, they have been selling, and that's what happened on Friday as well. They sold roughly around 480 crores. The DIs, they chipped in with around 180 crores. That's 3 straight trading sessions that the FIs were selling. Now, we're looking at the Nifty open interest. You had shedding out there. You had the Nifty Bank open interest as well. There was shedding out there, telling you there was likely to be some unwinding. And that's precisely what the FI data said. They unwound some long contracts. They wrote some puts though, and they bought 3 calls for every 1 put in Friday's trading session. Net from the start of the week till the end of the week, they added more short positions. That's why the short positions moved from around 41% to around 44% odd. Now, if you're factoring in from Friday's low and factoring in the SGX Nifty as well of around 50-60 points odd, then we'll be opening up nearly around 150-160 points from the low point of the day in Friday's trading session. So just keep that in mind if you're looking out there to go ahead and take a long positions. Be wary of this particular factor that we've already seen a rally of around 160 points. Nifty levels 11,750 to around 12,100. I say this because the 2 most active strikes in Friday's trading session were the 11,800 put that added nearly around 9 lakh shares, premium at around 41, and on the call side it's around 12,050 call that was most active as well. So if you want levels, then Friday's low of around 11,770, that becomes the near-term support, while on the upside, 12,100, that's the all-time high. The Nifty needs to take out there to go to higher levels, so that becomes the crucial resistance.
Okay, Nigel, thank you so much for that. So quite a bit of rally from Friday's low itself. But with that, it's a wrap on this edition of Power Breakfast. We leave you with the picks of our bullseye contestants for the first day of the week.
My first buy call is on Havells. Maintain a stop loss of 775 for an upside target of 815. My second call is sell on Max Financial Futures. Maintain a sell with a stop loss of 445 for lower targets of 420. My third call is sell on MGL Futures. Maintain a sell with a stop loss of 870 for lower targets of 835. My fourth call is sell on Godrej Industries Futures. Maintain a sell with a stop of 492 for lower targets of 472.
My first pick today is a buy call in Havells with stop loss below 776 for target around 805. My second pick is a buy call in Chambal Fertilizers with stop loss below 184.50 for target around 203. My third call is a buy call in GMM Pfaudler with stop loss below 1347 for target around 1425. And my last pick is a buy call in Gujarat Fluoro with stop loss below 1059 for target around 1185.
The first buy recommendation is on Bharat Finance. One can buy Bharat Finance for a target of 1009 with a stop loss of 956. The second buy recommendation is on Escorts. One can buy Escorts for a target of 605 with a stop loss of 575. The third buy recommendation is on IRB Infra. One can buy IRB Infra for a target of 122 with a stop loss of 113.50. And the final buy recommendation is on Voltas. One can buy Voltas for a target of 633 with a stop loss of 606.